Reporting season moves, all the highlights, lowlights in the view of Marcus Bogdan. He is Chief Investment Officer at Blackmore Capital, and he's joining us live from Melbourne. Marcus, nice to have the chance to chat with you again. It is a general question, but if you had to think back over the past 2-3 weeks for a highlight, one company that really shot the lights out in your view against what have been pretty low expectations, we've got to say.
I think CSL confirmed what a great company it is, faced with great difficulties in plasma collections and the range of costs involved in that, but it still is being able to deliver very good profit. There's a range of things it can do in FY21, whilst they're still being impacted by plasma collections, particularly in their largest US market. I think with influenza, the plasma, the underlying demand there, I think that was a great heritage stock that illustrates the quality of that company in difficult times to continue to deliver on its earnings expectations.
Flip side to that then, Marcus, is, where was the real disappointment so far? Is it a sector in particular, or was there a particular name that you perhaps had in the portfolio that has really let you down?
Yeah, look, I think telecommunications has been a bit tougher than we anticipated, especially with international roaming, no migration, no people going overseas. And so that definitely affected Telstra. Whilst they did meet their guidance, their forward statements suggested that competition is deeper. There's pricing pressures there, and until we get sort of back to more normalisation, I think that business remains somewhat challenged, even though they can still pay a reasonably good dividend.
Well, if we're going to look at some of the stocks that have just come out today that are also paying dividend, that includes Cleanaway, we've just announced on the program. They're paying a final dividend of 2.1 cents, but we did see profit slightly down. How did you see these results?
Look, I think Cleanaway's result was excellent. It underpinned the defensive characteristics of the business. They do have exposure through SMEs, and particularly in their liquid businesses, which were certainly under pressure. But net, I think the result was strong. I mean, underlying EPS was up 8%. As your slide showed, the final dividend was up 10%, and the balance sheet remains strong with net debt to EBITDA of around 1.5 times. So it's got the things that we like. It's got defensive characteristics, which underpins earnings. But I also see, even though guidance was not provided, as we get back to more normal levels of activity, there are parts of the business which will start to improve over time as well. So that would be a core stock. And more broadly, the industrial sector has done reasonably well in this reporting season. You saw good results from both Amcor and Brambles as well, which is just an illustration of that these strong franchises have managed very well in this downturn.
So, Marcus, is it fair to say that you are not turned off completely by a lack of forward guidance coming from companies? It's the ability of these companies to articulate the fact that they've got a way to leverage the reopening?
Yes, I mean, giving guidance in this reporting season has been rare. You saw guidance from Amcor, you saw it from Goodman, from Brambles, but you need to sort of then look at, well, what are the catalysts there to reignite earnings? In the healthcare space, well, it's obviously elective surgery coming back in play. So understanding those points of leverage through time, and then the expectation of when those things will start to re-emerge. But I think in the interim, you need resilient earnings and a strong balance sheet to get you through this period.
And is that how you're looking at the coin for Ramsay Healthcare, which we're expecting to report earnings tomorrow, just seeing how it plays out, whether all those elective surgeries, people actually choose to take them at this point in time?
Yes, absolutely. I mean, you take out Victoria for the moment, but how quickly people are going back and getting elective surgery, the level of utilisation in their hospitals, that's in Australia. And then in the UK, there's a number of new contracts where the NHS is potentially going to allow the private sector to do more work. And that's also an important theme in Australia, where the public system here is postponing elective surgery, and then how much of that will be transferred into the private sector.
And when it comes to Ramsay Healthcare, do you think that there is also the possibility that we might see some surgeries that were to be carried out in the public healthcare system being pushed over to the private healthcare system? I mean, is that a potential area of opportunity for Ramsay?
Yeah, it's inevitable, I think. And historically, the public system has been a competitor for private patients against the likes of Ramsay Healthcare and other private providers. And this is a structural shift, which I don't think will go away. You're seeing it both here in Australia and the UK, and also in the European markets, where that public system has deferred those critical procedures, and I think over time that slack will be taken up by the private sector. So it's certainly something that we're watching carefully, and they will ultimately be a beneficiary of it.
Well, looking ahead to some of the results that we still are expecting to see, which do you think are going to be the ones, aside from Ramsay, that might really turn the dial on where the markets are trading at this present time?
Well, for us, we're virtually through our earnings cycle. Today we had Cleanaway. Tomorrow we've got Ramsay, and then further beyond that, we've obviously got the three retail banks going forward. But net, I think this has been an encouraging reporting season. It was well telegraphed that earnings per share would be well down, but I think the better companies have demonstrated why they are quality companies with resilient businesses.
Well, I'm going to leave it on that positive note, I think, Marcus, because there's so much negativity to digest out there on a daily basis. We wish you well, and thank you for joining us today.
Thank you very much. Cheers.
Marcus Bogdan there from Blackmore Capital, and just